Welcome to TheoTrade. This is Don Kaufman. August 3rd, 2022. There's just about 4 minutes to go to the cash close. The S&P's up a blistering 70 handles, which you just got to ask the question, is it a market rally or a market ruse? Either way you want to put it, I think there's some phenomenal opportunities really opening up in the broader marketplace. I mean, we have just seen one-sided trade in the S&Ps on a day-to-day basis, really since having crossed up and through the 39.31 gravity point, which right off the bat here really brings into scope. Let's do it. We have another gravity point on deck, and it's reasonable and plausible that we're actually going to hit this gravity point. You know, if you asked me this probably 2 weeks ago, I'd be like, no way, man, that can't possibly be in scope. We're staring down the face, though, right now of 42.11. For those of you that are maybe a little newer to TheoTrade, or you haven't necessarily tuned into videos in months or ever before, we have identified very specific and finite levels of trade to where the marketplace is literally drawn to. That can actually occur simply because of the dynamic hedge that exists on the professional side of trade. For the most part, if you really wanted to sum up, like, what is a gravity point? It's like a happy place or a seam for risk. So for the most part, in the past, if there's been, very, very heavy open interest, which obviously pertains to the option marketplace, there's some heavy open interest here. There's some heavy open interest down here. We actually hit that gravity point and we'll sit there for a period of time. Again, when I say it's like a seam in risk, it's kind of a seam between buyers and sellers. In any regard, that 42.11 carries major weight. Previous gravity point, as I said, we broke off of was that 39.31. Right now, though, again, it's a blistering rally. But the very fact that we're just migrating, if you will, right back up to this other gravity point of that 42.11, nothing unusual at this point in time has actually transpired. In fact, the previous rally that we saw back in the time frame of March, okay, was generated exclusively and specifically off of that 42.11 gravity point, was a major pivot. In fact, we can actually bring up 180-day 4 hours of trade, and you can take a look and see how pivotal this level happens to be. One thing to mention and to always remind you about these gravity points, every time we hit one, it has literally been a 50-50 shot, whether we're actually heading higher or lower for the remainder, if you will, of that day. A little bit of confluence, though, on this particular front. Really drill into this 42.11. The interesting area happens to pertain to the SPX, the mother of all products. The interesting area, the upper edge of this week's expected move, like you can't even make this up, but expected move this week, for those of you, again, kind of unaware, uninitiated, is about $80. For the most part, that's how options depict risk for this week. You're looking for an 80 move dollar higher, 80 move dollar lower. And the interesting thing, the upper edge of the expected move also happens to correlate to 42.11, but that's 42.11 inside of the SPX, not necessarily the S&Ps. Either way you want to look at this, as we're coming into today's cash close, that 42.11 carries very, very significant weight. I think the question, though, is, are we going to be able to make it there? As I said, the market rally, obviously, okay, we are squeezing the pants off of the shorts right now. I'm one of them. But I look at this as being a bit more opportunistic. In terms of volatility, you got to anticipate that there's going to be vicious, okay, mind-blowing rallies. I mean, for the most part, now we've traded 3,600 and we're all the way back up to, there's our closing bell. We've traded 3,600. We've rallied all the way back up to 41.55. And you look at this and you go, well, it's just ridiculous. I mean, come on. You're 5 500, almost 600 S&P points higher by the time we get up to the 4211. That can't even be possible. It can't even be plausible. But we saw, okay, a similar rally, maybe not as significant in terms of price action, off of this big reactionary low here. Okay, where was that reactionary low? Ironically, it was right around 4130. We rallied all the way to 4600. So before you actually take this to the extreme, that's why I'm asking if it's a market rally or a market ruse. A lot of this happens to be a squeeze. There's another picture that I want to present for you to get you to understand why right now I see such opportunity. And I'm going to tell you right off the bat, the opportunity at present time is to take very measured, very controlled shots, if you will, to the downside of the marketplace. Okay, and you go, well, but it's such a bullish market. That's okay. I'm not necessarily going to bear up and just start shorting everything. I'm actually going to show you exactly what I mean in Apple here momentarily. But one of the things that I want each and every one of you listening to this to kind of recognize is that so the market is fueling itself back to the upside on what? Primarily on the logic that the Fed could eventually do an about face. Consequently, though, the Fed has already said that inflation, okay, isn't, it's really entrenched and there's not going to be an about face. That didn't necessarily phase the market. But there's one aspect that I'll bring to you, okay, that I think really will strike home. The unemployment is still relatively low. Clearly, that's going to be a big number come this Friday. The employment situation is coming out on Friday. I'll push that aside for a moment. But if the percentage, okay, involving unemployment remains low, that is going to fuel the Fed to be significantly more aggressive with rate hikes to curb inflation. I'll further that with this. Markets not faring poorly. In fact, they've rallied significantly. A significant rally inside of the marketplace, once again, provides, okay, the exact fuel that the Fed would need to make, again, a much more drastic rate increase. If CPI comes out, once again, anywhere near 9%, okay, you can forget it. They're going to come in and they're going to come in as aggressive as possible. I mean, think about the confluence of events. You have a market that's rallying, unemployment's not bad. The economy might have a little bit of like sag in it, okay? But at this point in time, we're giving everything we need to the Fed to make this marketplace just, hey, hottest inflation out there. A rally, okay, is unto itself indicative of more inflationary environment. All right, so how would I go about taking, if you will, a measured shot to the downside? Because again, my assumption moving forward, it could be the Fed using rhetoric, which they've been doing the last couple of days. My assumption moving forward is the Fed is going to start to have an extraordinarily heavy hand. I look at products like Apple, wild move back. I mean, compare Apple on a percentage basis to many of the other tech companies out there. Apple is down approximately, okay, we'll just round it, about 9% on a year-to-date basis. All right, so that's Apple. How does that compare to other major tech stocks? Taking a look at Microsoft, off by what? 15%. Amazon off by 18%. Meta, do we need even mention 50%? Google's actually down by 18%. Tesla's still down by 23%. Nvidia is actually down by 37%. I mean, I can go all day long. Why am I picking on Apple? Because if the S&Ps are to sell off, okay, you go after and you think about like Apple, and I know that a lot of people are going to bring fundamental reasons why Apple is not necessarily going to sell off. I can't even look at that argument, okay? Apple is owned by almost every single mutual fund out there. If the S&P sell off, Apple's going to get hit not just hard, okay, but in theory will get hit harder. It is the primary constituent of the S&P 500. It's the primary product, of course, of the Nasdaq 100. It's the largest monkey on the block. period. This thing rallied. It was down 28%. It's now down 8%. It's a straight 20% shot to the upside. This is where people start saying it's a bull market. So how might you go in and want to take advantage of something like Apple? This is not the quintessential trade that I would send out in a text message, but it's a very measurable shot. And you can see I put it on already. Okay. I went out and purchased, okay, all the way 79 days out. I purchased a 155, 145 spread. Let's just say it's trading for $2. Trading $2 for a $10 wide spread, which gives it an inherently low probability of success. If you want the probability of success, it's somewhere around what? It's about a 20% chance of making 1 penny or more on the spread. But this, and you go, why would you ever do a trade with a 20% probability? Because the payout would be phenomenal should we actually break back to the downside. How far do we have to go? I mean, for a complete and utter payout, and again, I'm giving myself 79 days, people, coming back down to this 145. Think it's plausible? You think it's possible? I mean, come on, we were just there. We were just there less than 3 weeks ago. What makes me like this spread even more than that? Apply auto expected moves. Now, I know that Apple just went through its earnings. Look at the auto expected move. So it hit the upper edge of the expected move the week before earnings, cracked outside of it the week of earnings. I'll discount that one. Cracked to the upside of the expected move today. I mean, this is what, dream setups are made of. You don't have to like the spread, but like the fact that I'm taking a very different position, very different style of trade, a style of trade that says, hey, if we're wrong, we're going to walk away from $2. And you will lose the full $2. But you have 79 days, okay? Can the marketplace hold it together for the next 79 days? Again, between a market rally and a market ruse, I will take the ruse. I don't think these S&Ps have what it takes. Stronger the marketplace gets, the heavier the hand from the Fed. Don't fight the Fed has been the adage for umpteen years, and I'll stick with that. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.